Katsina state government projects to generate an additional 8 billion naira annually from the development levy and cattle tax reintroduced to augment the economy of the state. The state is trying to create a balance between the meager resources at its disposal and the ever-increasing population insecurity and environmental degradation. Current economic indexes have shown that many states in the nation will face greater economic crisis if they do not rise to remedy the situation ahead of time. And TVC News correspondent Yusuf reports.
The explosion, insecurity and social welfare are among the major issues that have made the government to look inward. Katsina State has witnessed drastic revenue reduction in the last few years due to the instability occasioned by COVID pandemic, banditry and kidnapping. Many people can no longer go to farms and others are rendered helpless as a result of senseless killings of innocent souls. The state is reintroducing development levies and cattle tax as a way of bolstering the crisis-driven economy in order to salvage the people.
So when we are preparing this year's budget, we realize that the rate at which we are moving in terms of revenue, we cannot complete most of this project within the life of this administration. Specifically attach them to some specific project that we want to complete. We have gone far. There's a legislation, in fact the budget is appropriated already, as you are all aware, and it's operational. And part of the budget company, there is that 50 billion naira which is coming from the bond.
Although the reintroduction of tax at this critical time may not be welcomed by the majority, the state government is determined to reap the multiple gains it will bring.
For the cattle rustlers, they are busy rustling cattle everywhere. The Fulani herdsmen, their leadership are asking for the introduction of cattle tax. And they said that time when it was happening, every herder, the record of his animals are being kept by government. And it's an annual event. If you collect this year and you have to go back next year, and you realize the number of cattle have multiplied, that herder needs to explain what happened. Because there is no way you can have 20 cattle today, and next year it will be 40. It can't happen.
The unpredictable nature of the oil revenue has made it mandatory for states to intensify efforts to increase internally generated revenue to finance the daily running of the government and savings.
The state IGR at present is very, very low. And what you just said now is supposed to be the reverse of the case. The federal allocation is supposed to ordinarily be it complement the IGR, not the other way around, because Nigeria operates a federal system of government, so states are expected to be autonomous. So the federal and states are now looking inwards.
With small businesses affected by the COVID and insecurity crisis gradually crawling back, government should provide further to increase their chances of survival. It is envisaged that an enhanced revenue base will not only increase the spending capacity of the states, but will promote gainful employment and harmony within states. Yusuf, TVC News, Katsina.